Yeah, I mean, I really like how we've come down in here to this higher time frame. We look at it weekly where we had it just a second ago. Still kind of bouncing off that structure. We just need to see if we're going to hold that. If we do, I would think we would get some type of consolidation around here. I don't think it would be an immediate push back to the upside. I think we'd get some kind of consolidation and then a little down, then a little up, something like that overall. And if you go into the monthly, I mean, this looks like a good spot to kind of bounce from, but this is a very bearish candle. So a couple more days in the month, see where this one ends up. Are we going to recover a little bit, or we just going to end with a pretty good sized bearish candle? If we do, I expect October to start a little bullish and then come down and grab some of this liquidity. It's a pretty good straight line right there, situated at the top of that, kind of an order block right in there. Probably be a good area if price continues to kind of fall. Might be a good area to see it bounce from. So 4091, God, man, that'd be a one heck of a pullback. That would be longer term, like October, November, coming down, and then a pretty good Christmas rally in December, bringing it back up. That's like super long term. Take that off. Actually, kind of like a bounce here. This is a pretty bearish little two couple of drops right here. So if we do bounce, I don't think we bounce right away. Just like on the daily, I don't think we go back up. I think we consolidate a couple. We've got some inefficiency that we might, hang out in and then go. Oh yeah. Let me see. Yeah, I'm gonna anchor that right there. There you go, right at the midpoint. Looks kind of light. A little better. But yeah, definitely that 70 is going to be right near where that monthly order block line was. Yeah, I don't like again. I don't know if I would necessarily consider this a bounce, but definitely a spot where we're going to slow down some and possibly get some kind of maybe a couple of weeks where we're little better than consolidation, and then a kind of down, maybe another wick right here, a little bit deeper wick, and there you go. So forming some type of double bottom, clearing out some of this inefficiency, messing around with this structure, We got some inefficiency that we might be, paint rolling through. This is going to be a good spot to put a structure line on. In fact, I think I'm going to do that right now. This high ended up producing the low. So it's a good spot for that structure there. Take that off. We know where that's at. We know where that 50% is. Basically right on that guy. So yeah, that would be definitely for the next week or so, maybe a place where we could probably see price kind of get to. I don't think we slam through it, but definitely get to. A little bit of daily, and then we'll start moving in. I don't trust that as like a wick that I would be playing a bounce off of. Just that candle, it looks pretty similar to here, but I think we're in different places in the market right now. So, and I don't think I trust it. So, I think we get another push into here, maybe a little bit below consequent encroachment, and then this little dotted line right here. I know y'all probably can't see that. We get to a lower time frame, like the one of the hourlies or the 15 minutes, and there's some structure right here. Probably be a good place for maybe today. But yeah, this daily push down, I don't trust that just yet to be the last push down. And there's that. Pull this out. So consolidation, drop, kind of a push. Didn't trust it. Huge slam down at around 10 o'clock to the afternoon. And then recovered most of it. And now we're just consolidating. And as you can see, building up that liquidity on the top side compared to what we did here. So if we do get back down into here, we don't need to break that. Just another wick into the structure, lower parts of these candles here, and then a push out. When we push out, we might grind up, and then once we hit that, we should go. Again, it's a news day. It's a pretty good news day compared to the whole week. GDP, unemployment claims and stuff coming out at around 8:30. But this afternoon at 4 p.m., Powell speaks. So today might be, I'm hoping it doesn't look like this. So let's drop into the hourly real quick. It's a pretty good candle. Looks like we did clear out what little inefficiency was there. That's a good candle right there. So higher time frames seem to be looking more like we have another little drop, and then the lower time frames are building that liquidity on top to where it looks like once we do this push should be pretty good. But we've seen this kind of pattern before. This is very similar. Start building. We actually broke structure and then we broke down. All right, a little bit here, a little drop, consolidation, breakdown. There's that consolidation, this drop, push up, and now we're consolidating to the right. So another reason why I'm not trusting I'm not trusting this push until it actually shows me that we're pushing. So you can even go and say here, this drop, this drop. I mean, it's just doing the same thing over and over. Yeah. Yep. But I mean, I've always said liquidity first, right? So wherever the liquidity is being built, that's where I believe the market is going to eventually go. Now, when it goes there, I don't know. But we had this nice move to the downside. We did leave inefficiency, but did it respect the inefficiency as far as like wanting to come back and fill it? No, it respected the liquidity. Yeah, market maker sell model. Market maker sell model is those waves, right? We hit a higher time frame point of view, we drop down, we consolidate, we drop down, we consolidate, we drop down, consolidate. Eventually, there will be a bottom and we will start coming back up, breaking structure, making higher highs. And this is would be the buy side of that model. And this is the sell side of that model. So, and that's the reason why a lot of people have probably lost quite a bit right in here and right in here, thinking that, we've hit some higher time frame points of interest down low, as we come down, and we should have been making our way back up. But when we zoom out onto, these higher time frames, we had a really nice inefficiency right here, structure line right there that we got to, a little bit of structure and junk right in here that it wanted to almost get to, right? So that big gap, it will always respect the higher time frames. So yesterday had that sell bias in, and going into a 15-minute chart. We were sitting here, right in here when we were on the stream. And I was like, yeah, I really kind of like this bullish push, but I was wanting, you know, some movement above into here. Didn't trust it until we kind of broke above that. And because I felt like we would come down for some more liquidity, we did. We almost faked out right there. And then we just rolled. Right. And this is a lower time frame sell model right here. So drop, consolidation, drop, consolidation, drop, consolidation, drop, consolidation, drop, consolidation, push, break of structure, right? Consolidation, push. We should have had another consolidation and push, but we didn't. We broke down. Filling up some inefficiency right in here. And then it just stalled overnight. And on the higher time frame, this is just all consolidation. But on the lower time frame, you could have played the bottom here. Lower time frame, 5-minute chart, you probably get a break of structure and an entry. Maybe a 3-minute chart. You got a 3. There you go. a nice little spot right there. This would have been a good area for a buy late afternoon. I would have been targeting that structure, so I would have probably missed. I mean, if I would have more than likely just targeted that structure. Probably not even that much. Uh, yeah, not that much. We're on a sale, 3 to 5, somewhere in that area. Yeah, it's a staircase. Exactly right. It keeps stepping down, and then we get consolidation, and we start breaking out. But that's the reason why we try not to get like too um, impatient, right? Because there's no reason why that wasn't the bottom, right? Got down to here, consolidation dropped into a higher time frame point of interest. This should have been that consolidation that, finally broke back up, but it didn't want to, right? Pushes back down, takes more stops out. Consolidation, we should break back up. It doesn't, it drops back down, takes out more stops. Finally starts giving us something to look forward to. And on the 3 minute chart, that's the first time this shows up. Those two candles like that. Let's go to a 4. I bet that's a hammer. Yeah, somewhat. A little bit of consolidation here, rejection, pulled back down into it. I don't know if I would have been able to play it off the 4. It's a clear double bottom, but I don't know if I'd played it like that. 5 minute chart, pretty good wick right there. Yeah. Yeah. Morning time, we couldn't break up right in here. This is where I thought we were going to break up. Um, this is basically where we were at in the stream. And I was talking about we needed to see some of that liquidity being taken and then a push up through there. This was a possible target if you were to get in right in there. But then again, that would have been what, almost 10 points, which would have been way more than what you should have been getting. We should have been targeting just because we're in that extreme downtrend on the higher time frame. So 3 to 5 points is all you should have been targeting right in there. If this was a trade area, and you might have been able to get it depending on your entry, but price just continue to consolidate right there, which is just letting you know, like, it's not ready to go up. 2, you got this liquidity built up on this left side over here. More than likely, we're going to reach back down. Look at all that liquidity right there. All right. It's the same thing as that, except it's just horizontal. That's the only difference in the two. Still liquidity. This liquidity to me is easier to read than that one. Just because this one is also building up on the top side, right? Whereas this one's taking the liquidity out as it goes up, but you can see there's clear liquidity being left behind there. So I feel like this type of consolidation is way more easy to read than this one, because this one, how many fake outs we can get. So we started leveling off right here. That was kind of a sign for me to not be trading as far as, like, especially longs, right? We'd come close to the median. We'd reach kind of some higher points right over in here where we had, bounced into. And then we leveled off, and then we just started to fall, taking out that liquidity we built up, but also coming all the way back down into that higher time frame point of interest. And at that point, you just have to wait. If you don't want to trade any of that, I mean, you could have easily traded this right here. But if you don't wanted to trade that, like if this wasn't a part of whatever plan you were trying to, then you would have just been waiting for price to give you a reason to get in. And it doesn't really give you a reason to get in until way down here. And that was on a lower time frame. So even on the 5 minute chart, I don't even know if there would have been an entry for me on a 5 minute chart down in there. I don't know if I would have trusted that as structure. And by the time we break up here, it just keeps going, right? So now I'm chasing, if I'm trading up here long, I'm chasing this move. Like, I feel like I missed something, so I'm chasing that move in a downtrend. Chasing a long trade in a downtrend. Don't that's never a good thing. Let's see where we at now. What I like about these patterns now that are kind of popping up on this side is, let's go back and look at the similar drop right in here, up here. We were talking about this yesterday, how the down moves are way more exaggerated than the up moves. We got a pretty good up move there. Pretty good candle there. I don't know if y'all can see that. Let me make it a little bigger. But the down moves are way more drastic. Even in this picture right here. Pretty solid down move, grind. This candle's pretty good down. This area right here is pretty solid going to the downside. And then we do have a pretty good push back up. Consolidation and another push back up. But then consolidation. And within this consolidation, the down moves produce the lower lows, whereas the up moves don't give you the higher highs. And that gives you that liquidity that's eventually taken. Get up here, and then we fall off. Yeah. And if we go up here where we were talking about, I mean, does this not look like what we're looking at down there? I mean, it's not identical, but it's pretty close. And this is what failed. I mean, this was news, but this is what failed. So, this reason it's kind of hard for me to trust even this pattern that I feel like is really bullish, because it's failed quite a few times lately. And now we're looking at something similar. Let's go back to a 15-minute chart. And this right here, the only difference in this pattern and what was it, this 5 minute pattern right here? You have to cut the rest of this off right here. So you don't want to look at any of this. You just want to look at what has happened here to here. And there's really not that big of a difference. We had a little more consolidation in this zone. where this looks like it's just a drop and a rejection. So this to me more bullish than what that is. And in hindsight, obviously, this ended up failing. We did make new highs, but it still failed. So it's one of those things like you just, yesterday we didn't really have a bias coming into it right here. Like we had that liquidity that was right there that just kind of kept like, I don't really know about it. So I wasn't trusting the long. So I was looking short and it gave us the short yesterday. So today we're getting a completely different look. Like the liquidity is being built on the top side instead of the bottom side. Does that mean we're, headed to the moon, going to break out? No. I just feel like we're probably going to hit up here at some point. We're going to hit that Monday low. And again, I don't think that I would be trying to shoot for 40 points, you know what I mean, or 15 points on the ES. I think, 10 max is some good targets. But I do like how we're building that liquidity now on the top side. Got a pretty good little structure buy side right there. That if price decides it wants to start going, I think it goes pretty quick. Something similar to this right here. I think it goes pretty quick, but it just depends on how high it's going to go. So, but I do like that. I mean, obviously, I still like this pattern that's forming. Let me look at the NQ super quick. That was all on the ES. I mean, obviously, exact. I mean, that's how correlated they are right now. Look how exact they are. Here's the difference. We've made a higher high there. So divergence between here and here on the ES and NQ. Another reason why it's like, I don't really know. But that's a pretty good buy side liquidity to hit there. So if we do start breaking up, we might, if we break up through that, we're definitely hitting the median, right? Or the weekly. But we are building up that liquidity to the top side in the same way, even right here on this, I guess, wing. But we have quite a bit of inefficiency below it. I don't, and this is just me, I don't feel like we're here yet. That needs to be broken. Yeah. Which is a break and hold will probably get you above that structure. This is a pretty tight Monday high, Monday low. Yeah. Yeah. Or it could literally douse it all the way down to that structure. We could fall out of that channel. And because, the dollar itself, oh God, I had to go in and like put in a whole bunch of information on this. That is not the dollar. I don't know. That's the reason I was, I mean, I know I've been kind of getting on around 15 or 20 lately, but I was actually ready to go at about 10 after, and I had to put in a whole bunch of information for TradingView to give me my charts. I don't know why. Upgrading something. And I didn't upgrade a subscription, by the way. It's exactly the same. But all right, so the dollar kind of breaking that trend there. Let me bring it all the way down to here. Yeah, that's a pretty good little spot right here. Let's see how we unfold there. And get back down into this Monday range. So the dollar looks pretty bearish today. Yeah, it's the first time I've seen it. Yesterday, there's that push up. That's that same staircase that we went down on the market, and now we just consolidated out. So notice how the liquidity in the market is being built this way, where we've got that liquidity here, and the inefficiencies and liquidity right here that the dollar seems to be reaching for. Not to mention this overall trend line that we're at right now. So a little bit of correlation there as well. I like this as a structure to be hit. Higher high, made a lower low with it, right? So, and I don't really know what that line is. Let me go to a higher time frame, check it out. Okay, there we go. So buy side liquidity, which needs to be a structure line now. Yeah. So the straight line that I've got drawn right there, I mean, it's pretty prominent on the 4 hour. So if the dollar doesn't immediately bounce, then we're going to have some inefficiency left behind that could cause it to continue to go, which is that's pretty positive for the markets. So let's see how that turnaround happens. Maybe we're finding the bottom here. All right. Well, I guess that's about it. Anybody, y'all have anything else you want to look at? Ask any questions? Awesome. All right. We'll see. Yeah, I'm gonna make it a point to hang around the markets a little bit today, do a little trading. Quick lesson on order block, sure, man. You're welcome, Kyle. I appreciate y'all being here. Fred, thank you very much. So order blocks. Let me find a good one. Probably go to a higher time frame. Find one good one right now. Okay, that's a good one. I'd like to find one that we've already like used. Okay. Probably consider this one. See if the hourly gives us something too. Something better to look at. Okay. Here we go. Down here where price is already. All right. So order blocks. When Order blocks are much more powerful when they happen at like the highs and the lows, right? Those extreme higher time frame points of interest. So this order block right here, and they're pretty, once you start seeing them, they're kind of hard to unsee. Okay. So I'm going to say that this guy, this white candle, is going to be an order block, right? And the whole point of them usually is price has moved down, right? And then we kind of snapped up and created this order block. I'm on the wrong candle. Hang above. Bearish, right? So bullish order blocks are usually bearish candles. All right. Bullish order blocks are usually bearish candles. Bearish order blocks are usually bullish candles. So it's kind of a good thing to remember. This is a bullish order block. Okay. So we've gotten this move to the downside. Then we have this nice rejection, right? Back up with this candle right here. Break in structure. The very next candle basically engulfs that candle and then is taken out completely, right? So we get like this block look in there. And that candle becomes your order block because there's a lot of people. One is going to be trapped in this candle. Two, this is where price kind of like worked itself out. You know, there was a lot of inefficiencies probably in this big white candle. So this candle was just one of those like paint roller, come back down and catch the hole type of thing. And then price then moved where it wanted to go. So the whole point with an order block is when price rejects out of it and goes away from it, we want to catch the move back into the order block and then take the buy from it. Okay. So now that we've established that this is a pretty good order block, let's drop back down into 15-minute chart we might go to a so you notice that the order block is these green candles right here. So it's not just one, it's fractal. So on every time frame, that order block will still be there, just be in the form of other, you won't see it as good. So when you do get an order block that you can basically see, you want to go ahead and box it like this. I used to put my order blocks in purple. So if you ever see any of my videos on order blocks, I think I do have an order block video. Did you watch T-Trade stuff?
Yeah, I started. I got the first two. Not
Okay.
all of them.
His explanation of order blocks pretty good too, but anyways, let me go ahead and just cut price off right here, right? So we're going to be looking at these green candles. This is my order block. And the reason being, again, is price is dipped into a higher time frame point of interest, right? Consolidated, we dipped in again, and then we have this nice bullish rejection that broke structure. Mm-hmm. So my mindset is the market is going to be bullish. Okay. Mm-hmm. And then we have this push down and then this push back up. So on a lower time frame, we probably even have an order block down in here, but I'm not going to mess with that just yet. We're going to talk about this guy that we've already got colored up. Mm-hmm. All right. So this is my order block. What I'm going to do is once I have it boxed, I'm going to take and I'm going to find the 50% of it. If I can find the 50% of it. Just the 50% of it, which is that red line. Mm-hmm. This is what I want to look for price coming down into. This is where I want to start looking for my buys. Now, that doesn't mean I'm going to take a buy as soon as it touches it. All right. I don't do that. I don't set limit orders. It doesn't mean I'm going to take a buy as soon as we re-enter that colored box. As you can see, we've re-entered it twice now. Right. I'm just going to have, I'm wanting the market to continue up. And this is the point in which I am going to be interested in a buy. because this is where patience sets in, right? I've read the market, I've analyzed it, I've got my area in which I feel like that's going to be my best place for a price, and I'm going to wait for that price to get hit. Two things that are making me happy about this is, one, look at that liquidity being built to the top side, which is further just making me confident in my bullish analysis.
Mm-hmm.
All right.
Yeah.
I mean, almost to a T, right?
Mm-hmm.
Now, that doesn't mean, of course, I'm not in this trade yet, but now that we've gotten down here and we full on rejected, now I'm really looking for that entry that I can find. And then bam, there's another rejection out. We're kind of starting to get into that liquidity. We get another push. So I'm looking for that inefficiency at this point. Actually, let me go back. Take out there. So here we're still on a 15-minute chart. Okay.
Mm-hmm.
Um, we can drop into a 5-minute chart, which is where we're going to start looking for our entries. Okay. And again, we can't look at these candlesticks and think, man, this is bearish, right? We've done come all the way up here, consolidated. Now we're dropping. I can't be bullish. You have to go back in. You have to realize that this is the area that I'm looking for, and the higher time frames are respected more than the lower time frames. And the only reason I'm at a lower time frame is to find an entry long. All right.
And you're
That right
thinking
there
you
is,
can stop out right below that midline or go all the way to the bottom of the entry block.
it really depends on like your risk tolerance. So I
Mm,
know a lot of people are like, oh, I'm going to put my stop down here. But if I'm entering my trade up here and I have a
mm,
10-point stop just to try and make 5 points, it doesn't quite make sense. Right. So
right.
my thing is it really just depends on your risk tolerance. Like you can stretch that a little bit. I mean, it's okay. But again, it just depends on your risk tolerance. Having a plan is good. Being able to deviate from that plan when needed is even better. So,
Right.
like, I don't want to risk more than 3 points, but I will if I am pretty confident in my direction. So it really depends on like you and where I enter and stuff. So, but what
Okay.
I see here is I now have displacement, right? So that's that push up. This is going to be kind of like my structure liquidity
Mm-hmm.
that I feel like price is now rejected off of that point I wanted it to reject off of. And it's given me displacement. So now I want to see a fair value gap in here. So oh, shoot, dadgummit. Of course I would do that. So now I want to see fair value gap. And now it gives it to me, right? So here to here has now become where I want to enter that trade.
Mm,
All right. So at this point, um, like I'm again, it's not that I wanted to enter down here. I mean, it would be wonderful if we could predict that, right? Set a limit. There's a lot of people who do set limits right here and has been in this trade and probably out of it. But
mm,
how many times have we set a limit and it just keep flushing?
right.
Two, you got to remember we're also in a bearish market. So even though I have analyzed this and I think we're coming up here to this line or the Monday high, um, I'm only looking for 5 points max, maybe 10. This is the NQ. So I'm looking for 10 points right now because I know I'm going against the trend. So I'm going to lower my expectations. And then this is not setting a limit order. This is just visually
Mm-hmm.
showing you like, wow, that's 30 points right there. Showing you that, this is probably what I'm looking for right in here. It's not 2 to 1, 1.5, whatever. And on the NQ or the micros, whatever you're trading, I really suggest starting out of the micros. But this right here would be a the way I would look at it. It's not, I mean, this would be ideal for me to have my stop below that, but I'm
Hmm.
just not willing to risk that much. Right.
Hmm.
So I feel like if we don't respect the fair value gap, then we're not going to respect my analysis. So
Hmm.
next trade candle comes in, and that's exactly what we want to see, right? That's textbook. I've entered correctly. That candlestick's beautiful, and we're probably gonna hit target. And it's all based on that order block over here. So that's the hardest part. Like one of the hardest, well, I say that for me, that was my heart. That was the hardest part for me was learning that, okay, this is my order block and then going into the lower time frames and trying not to reanalyze the market. You know what I
Right.
mean? Because
Right.
at that point, like look at the displacement I've got to the downside
Hmm.
and why wouldn't I be going short, right? We broke structure. We hit a high point. I've got displacement for a value gap. Like, why am I not trying to go short here in a
Hmm.
bearish market? I mean, everything's telling me to go short on this 5 minute chart. But remember, that's when you have to go back and say, yeah, everything it respects the higher time frame first. So my analysis came from the hourly, confirmed on the 15, took my trade on the 5.
Hmm.
That was
Okay,
my
this
entry.
was a good example because I would have gone exactly opposite.
Oh, absolutely. Yeah, and that's just absolute luck that was a good example because I didn't I didn't play it that way. I didn't trade that at any point. It's not cherry picked at all. That was just like, hey, this is we're going to look at that.
Hmm.
Um, but you can also look at it like even right here, right? So let's go back and we'll replay. Oh, no, do that. Let's go back to here. And this is cherry picked only because I can see it. All right. I'm gonna take this off. I'm gonna take this off. This is my order block. This is a higher time frame order block, right? If I go to like an 8 minute chart, this is gonna be crazy. All right. Everything's fractal, right?
Hmm.
Go to a 10 minute chart. Let's go to a
Oh
12
yeah.
minute chart. You can see that order block forming, right?
Hmm.
On all those. So 15 minute chart makes it even better. Wow, I guess it's a 20 minute chart or whatever. Yeah, it'd be about a 20. Okay. I'll stop playing around. Let's go back to the 5. All right. So on the 5 minute chart, we see this forming. All right. So we've got consolidation that we've come down and got, right? We've hit
Hmm.
a higher time frame point of interest. We're starting to break up. I see this forming. Engulfing candles is basically what they are called. So
Hmm.
anytime you see like this right here, like check this out. We've got bullish price action, and all of a sudden this huge green candle comes in and engulfs that one.
Right.
That makes that an order block, right? So not only can I use order blocks for entries, but we're going to leave this up here and we're going to make that a target. All right. And I'll get back to that in just a second. But right now, I'm really focused in this area. So I want to see price continue to move away from it. It does. All right. So this is going to be my order block. And at this point, it's not that price has to come all. Nope, that's not what I want. It's not that price has to come all the way down into it, right? We've moved pretty good ways away from it.
Hmm.
All right. And we're at a lower, like that other order block, we'd already pushed up, made a move, and
Right.
then set the order block and then pushed away. This one's at the low. So this one, I'd probably be more willing to get in the trade at the top of that order block.
Hmm.
Right. And then, have a whatever target, the 17 to ones that you see on YouTube. Uh,
Right. Yeah, because you're at the bottom of a longer range.
That's it. That's it. It's just where it's settled at, right?
Hmm.
This is where you want to, this would be ideal. Let me just say that. But nothing ideal happens in trading.
Hmm.
There's nothing ideal. So, but you can see prices moved away quite a bit, but this is the order block. This is where I feel like prices moved. I'm also looking at structure right here, right? So all this is going into my analysis, that I just believe that we're going to be bullish for a whole second. And then we come back down. There you go.
Mm-hmm.
We don't quite get to the 50%, but again, I'm willing to get in at the top of this. So if it gets down, it doesn't hit 50%, it starts rejecting there, I can go ahead and like mark it in if I wanted to. But the hardest part is not getting impatient. I mean, look at that. That's a long time.
Yes.
So again, respecting the analysis, trusting the market. There's no reason to be getting in up in here. Look at all the wicks. There's no inefficiency. There's no reason. Um,
What's very helpful to me, Joey, is that I've watched Jeremy and his hour plus long S curve videos,
oh yeah,
which are really good,
yeah,
but he doesn't
absolutely,
explain this.
right,
He says, take it by faith, you're going to form an S. And if it doesn't, well, then you were wrong, and
right,
move on.
yeah,
And I think, well, that's not good enough.
no, uh-uh.
I mean, that's back to
Because
the
a little bit
mindset.
of it is I'm just giving you just enough to make this look great.
Mm-hmm.
So you're going to buy into it because it happens a lot. But I'm
Right.
not going to give you why it's happening.
Right.
I personally know why it's happening, but I'm not going to tell you why it's happening because then you'll know. And what's the
Mm.
point? Again, going back to Jeremy is a way better salesman than I am. And it's not, I don't disagree with him.
Right.
It's a patience game right in here. But the reason it's a patience game is because of this guy right there. This structure that was formed, that breaker structure, this inefficiency. Like there's reasons behind price action. Another reason why I think it's all algorithmic. It's just,
Mm.
you know, computer generated for the most part. Like people are just not going to continuously over and over and over and over keep playing these things.
Mm-hmm.
You know what I mean? It's sorry, it's not going to happen. But we get this down in here, and let's just say I got in there. But if I didn't, look at how it respected that structure. And then the next candle, and then the break, right?
Mm-hmm.
So, well, looks like I'm wrong. There we go. There we go. Patience game. So if we're in here, my stop's going to be below it, and I'm probably targeting this top right here, or check out this order block. Now, if this works out and it taps the bottom of that, oh my God. Okay, dude.
There you go. Yeah.
But do you see what I'm saying?
Mm-hmm.
Like, look how perfectly that touched that too. Like it got into it a little bit. Like the open of this candle right here is 1493575. The high of that candle right there is 1493625. So
Mm.
that's pretty darn close.
Mm-hmm.
So, within 2 ticks.
Yeah.
But
Yeah.
you can see how
Yeah.
that can be a target. I mean, you really don't want to target that, but price you can make that like, all right, this is my magnet. I think price is being drawn to here. And then here's the last part of that inefficiency. This is where my target's going to be. And I got there pretty easy. Consolidated. Look, if your target was up here, look what you had to wait through.
Mm-hmm.
So just take the easy target, be out of that trade, and higher time frame. Here's your order block, right? Be looking to go long again.
Mm-hmm. Mm-hmm.
But so, but yeah, that's order blocks. They're everywhere, right? So you have to really be picky with your order blocks. You can't say this is an order block, that's an order block, that's an order block. Like you have to really be picky and stick to it. So
Okay. So it comes with experience, I
a-
imagine.
absolutely, back trading if you want to. I've never really had the patience for back trading. Um, but because I like to forward trade. I mean, if I don't have skin in the game, it doesn't mean anything to me. Like I can
Yeah.
go back and find these all day long and even sit there and go, okay, I'm gonna click the button until the price gets where I want to. Um, Now I'm in the trade. You know what I
Well,
mean? Like, but that's not
yeah.
gonna happen in real time. This whole time I'm probably losing my butt in long trades thinking I've already missed this move. Right. I'm
Hmm.
going long, getting stopped out. All right, here's the move. I'm going long, getting stopped out. And by this time I'm walked away from the market, blown my account.
Right.
So back trading is good to see it, but I don't think it's good to actually practice trading. It's good for
Hmm.
charting, it's good for seeing price action and how it actually works, but I don't think it's good for actual trading.
Hmm.
To me, I think you actually have to put money on the line and have that emotion brought into it. But that's also the reason why I say start with micros. Um, I mean, the difference in the fact that each tick is $1.25 on the ES, or in here it's 50 cents, compared to $5 and $12. Like, you know what I mean? Like you still
Hmm.
have the emotion, you got skin in the game, but you're not like staring at the chart intently, not being able to walk away from it. So,
Amen.
yes, sir.
Okay. Well, thank you. It's been another good week. I appreciate it.
Awesome, man. You have a good one. We'll see
All
you
right.
probably
Enjoy
next
your
week.
weekend.
Yes, sir. We'll
Bye-bye.
do it. Thank you. You too.